I'm hearing from Silicon Valley Bank's Gary Becker talking of the rate of IPOs maybe doubling, maybe tripling. But then I see Blue Apron today stepping back from an IPO timeline. Is it the right time for your portfolio companies to be going to the public market next year?
I think it's a great time. Really, people should take advantage of it. We had a really weak year in 2016, which is remarkable. I've been involved in technology IPOs for over 40 years. I got started young. And we never saw anything like it. We had high tech prices in the stock market, a lot of great companies, investor interest, and yet there are only 13 U.S. venture-backed tech companies. That's kind of the core of the exciting part of the IPO market. Only 13 in 2016, but they did well. They traded up an average of 56%, and they're mostly niche companies. So I think as we look to 2017, there's a few big changes. There's a large number of companies ready to go public. In my whole time working in technology, we've never had more companies of real scale, growth, excitement that are ready to go public, tech companies, than we have today. Part of that is because so many have delayed because how frothy the private markets were for several years. And they were able to get easier money in a way in the private market. That's changed. The public market now offers more attractive things. The institutional buyers are there. I think we're going to see some of the big names coming out. I think we're going to see a lot of excitement in the year. I think we'll see, and once again, I'm looking just at the tech US-backed venture companies. I would expect to see maybe 30 to 50 of them this year versus only 13, next year in 2017 versus 13 this year.
Matthew, do you agree? Because IPOs did come, they were few and far between, but like sort of Twilio did pretty well. How important is it that the share prices do well on the starter gun? How important is it that, say, Snap does well when it comes to market to help prompt the rest?
I think, and Sandy's familiar, I think Snap will be very closely watched, especially not just in its initial day of trading, but in the next 30 or 60 days of when it eventually goes public. I think the other thing to keep in mind also is when you think about the private markets and what Sandy mentioned about some of that frothiness, when we look at the data, a lot of the traditionally public market investors who gotten into the private markets in the last couple of years have really slowed down in 2016. So if you think about the mutual funds, the Fidelities of the world, the T. Rowe Prices, they've done fewer new deals this year than they have in the past. And also the hedge funds, firms like Tiger Global and Code2 Management, who are very active in the private markets, doing over 30 new investments in private tech companies in the U.S. in 2014, doing very few this year in 2016. So you're starting to see some of that capital that allowed a lot of companies tapped into in the growth stage really slow down in terms of some of where those sources of capital are coming from.
So Matthew, one of the big questions I think that a lot of people have is going to be the particular areas that we're going to see investments in. Do you see particularly hot areas in 2017 for IPOs?
I think when you look back at 2016 and the companies that did go public from the venture-backed U.S. companies, almost all of them were enterprise or non-consumer companies. So I think when we look ahead to 2017, there is, as Sandy mentioned, a very strong batch of companies who are on the IPO pipeline, and they do span the gamut in terms of business models as well as sectors. But I think enterprise, we do expect to see offerings when we look at some of the companies who might be on the pipeline, companies like Qualtrics and online surveying, or companies like Inside Sales and sales acceleration software. So companies who, across a lot of areas within enterprise, who we've seen grown and in some cases are profitable companies that may see an offering next year.
I've got a great chart for all of you. I'm going to describe it. I'm a bit addicted to one of Bloomberg's new functions. It's all about showing the startup barometer. This really shows the health of the startup ecosystem in the US. That's in the white line. We're seeing growth. We're seeing about 14%. But you are seeing in the yellow line, in fact, the VC exits have been in negative territory for 2016. We're down more than 20% in terms of how much we've seen the exits slow down. How much is the lack of exits stopping feeding an ecosystem? And Sandy, I bring it to you and potentially looking at Europe, because Europe could finally start to see a little bit more money coming back into the ecosystem and getting more startups coming, more billion-dollar companies. If we start to see Deliveroo and the like starting to exit, how much do we need to see exits to start to sustain the system?
Well, we need exits. It's remarkable that the private investing market's been as healthy and robust as it has over the last 3 years, despite a relative dearth of exits, as you point out. But that's not sustainable long term. But there's a pent up, I think, a large number of exits, both IPOs and M&A, because of course, M&A, we always think it's going to be countercyclical to the IPO market, but it cycles exactly with the IPO market. As companies gear up for an IPO, the big corporate acquirers who have massive amounts of cash, unprecedented tech, companies with massive cash hoards, those companies are really going to finally come in and take up some of these private companies once they're realistically thinking of going public, because that's always the kind of the catalyst for them making a final decision about moving forward on it. So I think we're going to see exits, and it's critically important to the health of the overall ecosystem.
Well, give us a sense of regional differences here as well. There's some signs that maybe Asia has been cooling. We've got Me Too. That didn't go off with much of a bang this month. So where do you see regional growth coming from?
Well, the regional question, I think that's going to be the biggest one, is going to be political, right? I mean, the big question, I think, next year in the U.S. is going to be, what impact does the Trump administration have? And we can talk all day long about the possibilities, and all of that could get blown out of the water within a matter of 30, 60 days. Who knows? So I think that's going to be a big question, is what kinds of political environments we will see, not only in the U.S., but of course, there's a lot of other nationalistic movements happening in several countries in Europe. You know, there's a lot of things, interesting things happening in China as well. So I think the political environment may end up having a bigger impact than we've seen in quite some time on overall investment activity, particularly around IPOs.